Forex Introduction. The foreign exchange market, Forex, is a global marketplace for exchanging national currencies. Because of the worldwide reach of trade, commerce and finance, Forex markets tend to be the world's largest and most liquid asset markets. Currencies trade against each other as exchange rate pairs. First question. When was Forex introduced? Foreign exchange futures contracts were introduced in 1972 at the Chicago Mercantile Exchange and are traded more than to most other futures contracts. Second question. What is Forex trading and how does it work? Forex trading is the process of speculating on currency prices to potentially make a profit. Currencies are traded in pairs, so by exchanging one currency for another, a trader is speculating on whether one currency will rise or fall in value against the other. The main object of foreign exchange market is to buy and sell currencies. Even though there are many other uses for the Forex market, its main purpose is still to make money by trading one currency for another. Forex traders can do this by buying a currency at a low price and then selling it at a high price. Type of Forex markets. There are three key types of Forex markets: spot, forward, and futures. Thank you for watching this video. Please like, subscribe and press the bell icon for more informative videos on Forex market.